We're talking about FTX there, Evgeny, and the fallout from that, and also some of the behaviors they engaged in terms of the commingling of funds. And I want to bring that to your business, because with FTX, you had about $59 million locked in to FTX. Are you planning to get your money back? And, you know, was there any exposure beyond that?
That's pretty much the limit of our exposure. And look, on the accounting side, we pretty much marked it to zero. I do believe there will be some kind of remedy coming at some point, but given just how complex the whole FTX corporate structure was, it was like over 100 entities and all kinds of like messy stuff happening in the background. I think it will take a few years to be resolved.
Yeah, one of the parts of the FTX stories is this sort of commingling of funds between Alameda and FTX and sort of where all that money was moving. Just in terms of your own business practices, are you able to confirm that you're not engaged in any of these kind of trading practices?
It's pretty easy to confirm. Like we don't have anywhere close to this complex structure like FTX. Like we don't have an own exchange. We have a relatively simple corporate structure of maybe 6 entities, and it's all flows into one overarching topco. So it's pretty straightforward.
We've also seen issues with liquidity, with also companies not being able to cover customer deposits as well. Just in terms of your own business as well, what do you do in terms of keeping assets on hand in the event there's any kind of run or customers wanting to pull funds out in any way? How do you ensure that you've got enough reserve?
Yeah, from that perspective, we are prop trading companies, so we don't have customers, we don't have client funds sitting with us. So again, we risk primarily our money, and so from that perspective, it's all covered. And from the risk perspective, like also how we manage risk, we always make sure that like none of the venues we're trading on blowing up can basically make us bankrupt. And more than that, even like 2 or 3 of them blowing up will still be fine. And so we've seen quite a few very significant, I would call black swan events happening in our industry last year, and we still emerged from it in pretty solid state. And
one of those black swan events was the collapse of the algorithmic stablecoin Terra USD and its sister token Luna, which many would argue really kicked off some of the contagion effects with the fall of 3 Arrows Capital, etc. There was reports that you made some pretty bold trades on Terra USD and Luna. You were playing the arbitrage between the UST token and Luna. Did you make a lot of money off of that?
Yeah, I mean, it's not something we can easily disclose, but yes, it's basically nature of our business to be where the volatility is. And in that particular week, most of the volatility was centered around Terra blockchain, about basically UST and Luna trading pairs on various centralized and decentralized exchanges, and that's where algos were primarily trading back then.
And there are some who've actually blamed you for the collapse of Terra with this trading strategy. I mean, how do you respond?
Look, we did not crash the price of Luna. I think I'm pretty sure that this was a party who were actually massively long USTs that finally decided to exit this position. Ultimately, what we were doing is basically providing bids to people who wanted to exit their UST positions on centralized exchanges, and basically then utilizing the blockchain mechanics behind the UST Luna to effectively keep converting this mechanism into basically unwinding of the whole structure. So we were basically helping market to realize as much liquidity as possible.